Hello traders, Andy Demi here from the London Trading Institute. Hope you guys are doing well. So in today's video, I'm going to be speaking about the Aussie dollar. So the last time we were talking about the Aussie dollar, we were sitting in this channel that is now basically not sitting in this channel. And we were speaking about the different scenarios of what to do if it broke or if it held. So today I'm going to speak about that, what I think is going to happen next in the Aussie dollar, and how you can take advantage of the opportunities that I see. If you are new to our channel, guys, please hit the subscribe button and do like our content. It helps our channel out tremendously. And I, for one, definitely really appreciate all of the support that we get. So with that being said, guys, let's head straight to it and have a look at the chart and talk about, firstly, if you didn't watch the original video, which was a couple of weeks ago now, I'll put the link in the description and I'll post it right here on the top right hand corner. So if you are basically, if you want to watch that first, you can, and it will give you a good sense of what we were talking about back then. So right now, we were speaking about at the time, is this market going to kind of hold on this channel here, or are we going to break? And if it's going to break, is it going to be a fake out where the market goes higher, or is it going to be a continuation? So here's what happened. The market broke the channel. And so what I was looking for at this time is, well, is the market going to break back above the channel, almost like take out, institutional style, where you take out all the stops and then the market reverses, right? But here's what happened. The market actually rejected this area here. And in fact, it rejected it a couple of times, and then bang, you got the big sell-off there. And here's what happened. The market basically broke down, created a new lower low, and now has come back up. And you can see it's coming back into the 200 EMA there. And again, creating these kind of rejection candles right there. And again, a nice rejection candle there on the 200 EMA on the 4-hour chart. And this is basically where we stand right now. Now, if I flick over to the daily chart, just to show you that picture, here's what the daily chart looks like. So in the last video that I spoke about, essentially my preference was for this market to go lower. But we were also considering, if this market possibly holds here, we might be able to sell it up here. Okay, so really catch a nice bounce back on the 200 EMA and then potentially sell it at a high price. Well, the bounce didn't happen. It broke through, and instead, what's happened now is the market has come back really nicely into the daily 50 EMA. So one of the key things to look out for, guys, when you're looking at the higher time frames is, where is the 50 daily EMA and where is the 200 daily EMA? And you can see right now that the 50 has, which is the red line, has crossed below the 200, which is a bearish signal. And that happened, a little while ago in August. But then since then, the market has retraced back, and these kind of act as magnets. So the market pushes down, it pulls back into this zone, and then the market pushes down. And again here, the market has pushed up, it's come close to this 50 EMA here, and again, it's attracting some selling coming in here. So this zone here becomes a sell zone. And what's also quite interesting here is that, the market has basically done its, this is the A right there, this is the B. And so you have this kind of nice AB. The C is basically in the red zone. So you can see that's our C point there, which gives us a projected target around this sort of area here. Okay, which comes in about 69-ish, 0.69. And we've got this kind of old 200 sitting here as well. So I would actually mark this down here as a block to target on the Aussie dollar. Now, what I like about this is that, so let's make that blog. What I like about this is that that would also mean that if the price was to kind of push down into this block, we'd find ourselves on this really nice channel support here, which comes in basically anywhere between 0.68 and 0.69. To me, looks like a really nice target zone. So any opportunity right now, the probability is on the short side. So selling is the highest probability setup. Now, if you're not in this trade and you're looking at this for the first time, let's go down to a lower time frame, like the hourly chart. All right. Let's have a look at the hourly. So this is the hourly chart. What you don't really want to be doing is you don't really want to be buying a market that's already had a big push down, right? And today's Friday. What will normally happen is the market will find the next level of support, especially because it's the weekend. So short term, it doesn't make any sense to enter a swing trade short today. But if you kind of take a look here, you can kind of see, where are the support areas or resistance areas? Well, you can see that this is a major one here. And that's coming in around, not far from now, about 15 odd pips. Okay. So, and if you kind of do your fibs as well, like the smaller fibs, you'll probably see that this is now completing a cycle here. And it looks like an overextension as well. So there's your kind of 1618. There's your overextension right there. So for me right now, if I was going to look at this short term, I would certainly consider this area here as a scalp buy, right? So if I can get the right price action confirmation, this zone here could be a buy entry. Now, I would also kind of add in a few other things and see, where is the daily trading range? Well, look, if you have a look at the daily trading range, it's actually in this box. So for those that don't know what the daily trading range is, it's one of our proprietary indicators, which gives us basically the predicted low of the day with about 95% accuracy. So if I just kind of move this box out of the way, if I can, let me just delete it. So you can see there that the daily trading range is predicting this to be the low. So with everything being said, you've got a level, you've got the fibs, and you've got the daily trading range. It doesn't make any sense. There's just not enough room here to take a trade now. But what you could do is look for a short-term trade long here. Okay, if you're that kind of trader, and then next week we could be looking for a nice entry, possibly. We could work out. We could do trend lines. We can do. You can look at these past support points that become resistance points. So you've got a few different options here. We can look at the daily trading range. We can look at the Fibonacci. These areas here, these white lines become possible short areas. You could even connect, these. You could even connect these points here as a sort of kind of trend line there, and all of these points become potential for short-term trading, for swing trading down. But right now, it doesn't make any sense. So all in all, guys, I like this. I think, this is definitely, you can clearly see, when the market is below the 200 and the 50 is below, look at what's happened here. So when that happened right here, look at where the market went. It went much, much lower. And, I'm not saying it's going to do that right now, but certainly that's what's happening, right? The 50 is below the 200. The market, the price is below these moving averages, and it's definitely below the 200, and just kind of going through the 50. So the likelihood is that we're going to have a push lower. And, you can also look at the daily. You can also take the levels on the daily chart. So the one that we mentioned is 68 cents and 69. You can see there's like a decent little level there as well, 67.45. And if you kind of go across, you'll probably find some more levels as well. So you can kind of do that. Okay, and I guess the fibs as well are the fibs are basically pointing down to about here. It's a little bit lower on this time frame, but yeah, I mean, basically right now, short term, I'd be looking for a scalp long if we enter that zone, but the higher probability move overall is going to be to the lower side towards 69, 0.69 and 0.68. All right, that's all from me, guys. I hope that you've got some important lessons and that helps you make better trading decisions. Don't forget to like our page, our video, and subscribe to the channel if you're new. And by the way, do check out the Crypto and FX Traders Club if you're not already in there. So it's a Facebook group, the Crypto and FX Traders Club, where we kind of give you exclusive content and support within the group, and you get to network with like-minded people. That's all from me. I wish you a great weekend, guys. Take care. Speak to you soon. Take care. Bye-bye.